Is Calgary's housing market finally shifting gears? After years of record-breaking prices, bidding wars, and sky-high demand, July 2025 data suggests that the tide may be turning. More homes are hitting the market, sales are slowing, and buyers suddenly have more breathing room. But does this mean Calgary is heading toward a buyer's market? Or is this just a temporary pause before the next surge? Let's break down exactly what happened in July 2025 and what it means for buyers, sellers, and investors in Calgary's ever-evolving real estate landscape. Market at a glance. July 2025 brought a clear cooling trend to Calgary's housing market, reflecting both higher inventory levels and fewer sales compared to the past few years of record-setting activity. Sales: 2,099 homes sold, down about 12% year over year. New listings: 3,911 properties hit the market, up about 8.5% from July 2024. Total inventory: 6,917 homes available, a massive 66% increase from a year ago. Benchmark price: $580 to $900, down 3.9% annually. Sales to new listings ratio: 54%, signalling a balanced market. This is the first time in years Calgary has seen a market that feels more balanced rather than tilted heavily in favour of sellers. Sales. Slowdown. Why it matters. Calgary recorded just over 2,099 sales in July 2025, an 11.6 to 12% drop compared to July 2024. This slowdown can be attributed to several factors. Higher interest rates. Although there are whispers that the Bank of Canada may cut rates in the coming months, borrowing costs remain high, keeping many buyers cautious. Affordability concerns. After years of price growth, even small declines haven't fully restored affordability. Increased choice. Buyers now have more listings to browse, reducing the urgency to buy now or lose out. This cooling trend isn't necessarily a bad thing. It reflects a healthier balance between supply and demand. Inventory. Surge. A buyer's advantage. Perhaps the biggest story of July 2025 is the sharp increase in inventory. With nearly 7,000 homes available, Calgary is now seeing levels not recorded since before the pandemic. This means buyers finally have leverage in negotiations. Homes are taking longer to sell as competition among sellers increases. Price growth is moderating and in some cases reversing. For years, Calgary was starved for supply. Now the pendulum is swinging back. Price adjustments. Are homes getting cheaper? The benchmark price fell to $582,900, a 3.9% annual decline. But let's look deeper. Average price: $616,686, up 1.7% from last year but down 4.6% from June 2025. Median price: $569,500, up 1.2% annually but down 4.3% month over month. So while year-over-year numbers still show some modest increases, the month-to-month declines signal softening. Breakdown by property. Type: detached homes. Benchmark price: $761,800, down nearly 1% annually. Supply: roughly 3 months. Detached homes remain relatively resilient compared to condos or row homes, as demand for standalone family housing continues in core and West End neighbourhoods. Semi-detached homes benchmark price: $697,500, up around 1% annually. Supply: about 3 months. Semi-detached homes show stability, proving attractive to families priced out of detached properties. Row homes, townhouses, benchmark price: $446,200, down about 4% annually. Supply: just over 3 months. Townhomes face more downward pressure, reflecting affordability concerns and growing competition from a surge in listings. Apartments, condos, benchmark price: $329,600, down nearly 5%. Supply: over 4 months, especially heavy in the northeast. Condos are the most affected by oversupply, with slower absorption rates and declining prices. For renters turned buyers or investors, this segment offers opportunity. The rental market snapshot. While resale activity is softening, Calgary's rental market is still tight. But there are signs of relief. Average rent: $1,914, down about 9% from last year. Larger rental developments: like Anthem and Arrowleaf's Arthur project in Curry, are aiming to meet long-term demand. This shift suggests some renters may be transitioning into ownership, while increased rental supply is helping stabilise costs. What this means for buyers. For the first time in years, buyers in Calgary have room to breathe. Here's why July's data matters for you. More choices. With inventory surging, you don't need to rush into a purchase. Negotiating power. Price reductions and seller incentives are becoming more common. Balanced market. No more extreme bidding wars in most segments. If you've been waiting on the sidelines, this could be the opportunity to step back into the market, especially in condos and townhomes where prices are softening the most. What this means for sellers. It's not doom and gloom, but sellers now face a very different environment. Pricing realistically is critical. Overpricing can leave your property sitting while competition rises. Preparation pays off. Staging, photography and marketing are more important than ever in a crowded market. Segment sensitivity. Detached and semi-detached homes remain strong, but row homes and condos may require sharper pricing to attract buyers. Sellers who adjust strategies now will still find willing buyers, just not at the frenzied pace of recent years. Investor insights. For investors, Calgary remains one of Canada's most attractive real estate markets, thanks to relatively affordable prices compared to Vancouver and Toronto. Population growth fueled by interprovincial migration. Balanced rental market offering long-term stability. But the key in July 2025 and beyond will be selectivity. Condos may present buying opportunities at lower prices, while detached homes continue to hold value in core areas. Looking ahead. The big question is whether this shift is temporary or lasting. With the Bank of Canada signalling possible rate cuts despite inflation concerns, demand could reignite later in 2025 or 2026. But for now, July's numbers highlight a cooling market that finally offers balance. If the trend continues, Calgary may avoid the extreme boom and bust cycles of the past and instead settle into a more sustainable trajectory. Final thoughts. The July 2025 housing snapshot reveals a Calgary market in transition, fewer sales, more inventory, and a cooling in prices. For buyers, it's the most favourable environment in years. For sellers, it's a reminder that strategy matters more than ever. And for investors, it's a moment to carefully target opportunities rather than chase every deal. So, here's the question. Do you think Calgary's housing market is entering a new era of balance, or is this just a short-term dip before prices surge again? If you're a buyer, would you take advantage of today's cooling prices or wait for further declines? If you're a seller, how would you adjust your strategy in this market? Drop your thoughts in the comments. I'd love to hear how you see Calgary's housing future unfolding.